Hi all, Joshua Stega here from etfadvisor.com.au. Today I'll do my usual weekly rundown of the Aussie ETF market and what investors should be looking at for the week ahead. Today I'm going to talk about three things. Number one, I'm going to look at the US market, and there's a little bit of caution there, and I'm just going to run through that and why I'm a little bit concerned. Number two, I'm going to look at the resources space, why I still like it, but I think it just needs a bit more time. And number three, I'm going to look at Asia. I still really like that space. That needs a bit more time also, but it's setting up quite nicely. So let's get stuck in. We'll start with the US market. So obviously the US market's hitting new all-time highs, and it's been really strong. So let's have a look here at, start with the US, so the S&P 500, and you can see, you know, at new all-time highs this week, but it sold off a little to close the week. Nasdaq's much the same, and volatility's kind of come right in as well. So that looks quite good. But just drawing that back to, say, March and April, you'd see that initial spike, then it settled right in, and then you got that tariff announcement and the tariff correction. Kind of looks a little bit like that, where you've had that spike settle in. What's going to happen from here? Is it going to hold down, or are we going to get another spike? We just don't know at the moment, but I'm going to be watching that really closely. So let's have a look at the volatility index in terms of seasonality. And you can see October's generally the toughest month, and then it settles down into November. But there's still a bit of volatility around. Perhaps, you know, we may be a little bit later this year, because, I mean, the volatility in October only kind of started picking up. It wasn't necessarily at the start of October. It kind of felt like the middle of October. So maybe this chart's a little bit, you know, 2 weeks later or something. So we'll see how it plays out here. But in general, when I'm looking at a lot of the charts, it feels like we need another week or two just to see how things settle. But, you know, in terms of the US market, I'm a little bit concerned. So you've got the Nasdaq, you know, also at new all-time highs. But then let's have a look at the equal weighted index. So there is an index, so this is the S&P 500, assuming you had an equal weight in all the 500 stocks that make up the S&P 500. And you can see that's, you know, that's certainly not at new all-time highs. It's kind of a little bit weak there, and it's kind of almost like at a double top there, and it just can't get going. And certainly hasn't rallied, you know, as much as, say, let's just compare that back to the S&P 500, which is well out of this kind of base there and has been trending up. So that's a bit of a concern. So let's have a look at the equal weight. So you can see pretty much just has a really good mix across the 500 stocks within the S&P 500. So, you know, 0.34%, 0.32% in terms of the allocation of that fund. And then we look at something on the S&P or the SPY, which is the S&P 500 ETF. And you can see Nvidia 8.5%, Apple, you know, 7%, Microsoft 6.7%, Amazon. So it's really the mega cap tech stocks that are really driving the market at the moment, and it's extremely thin. So just in terms of breadth, so this is some data here saying this was on the 29th of October. S&P all-time high will make the history books. It will happen with the most negative breadth at an all-time high on record. So that's huge. You know, just in terms of, there's the S&P 500, but this is the actual stocks that are participating in the move. So it's extremely thin, and that's a bit of a concern. Let's also have a look at this reading that we sometimes pull up. So this is S&P 500 stocks above the 20-day moving average, above the 50-day moving average, and above the 200-day moving average. And you can see here the S&P 500 at new all-time highs, or very close to, but the number of stocks that are above the 20-day moving average has been settling back down. So it's basically in a downtrend since September. Same with the S&P 500 stocks above the 50-day moving average. And the 200-day moving average is not as pronounced, but it's kind of the same as well. It's been trending down. So this is not a great sign. And saying that, you know, in terms of we're looking for a correction probably September And what actually happened in the market is we did get a bit of rotation, and it kind of rectified itself. But at the moment now, we're in this point where we're really, in terms of the breadth, it's only a very few, mega cap tech stocks that are really driving the market at the moment. And as you can see, it's kind of like there's pretty much, just in terms of these stocks, that's going to make up, a quarter or a third of the index pretty quickly, just in terms of a lot of these mega cap tech stocks. So that's what's really driving things at the moment. So I'm really quite cautious, just looking at that US market and the lack of breadth. And what we really want to see is, say, look at the small caps. So this is the small caps in the US, the Russell 2000. You can see it was very V-shaped, and we wanted it to spend a bit of time here just digesting that before the next move. And it looks like it, but also feels like it needs a bit more time. So it would be good if the mega cap tech stocks kind of sold off and money came back into the small caps or other parts of the market, other parts of the global market as well. So I'm a little bit cautious, and that's certainly reflected in our ideas this week. Like we had 11 ideas last week, and not many of them really got going. We're expecting a lot more, considering that the tariff news was certainly dampening down. It felt like we're getting a resolution there, but we just didn't get any, and we got the rate cut as well in the US, but we didn't get any push here. The push has been all in the mega caps. So that's something to watch this week. Certainly be watching the VIX. If that starts to spike, and considering how thin the market is, I'd be very cautious. Ideally, what we get here, say for the NASDAQ, is that we do get, a bit of a pullback into that base. And at the same time, we start to see money, say, moving back into the small caps or back into resources or back into Asia and other parts of the global market. So that's the big concern at the moment. So, keeping a really close eye on that. And, anything could change day to day. So expect a midweek update if anything does change. But at the moment, all eyes are on that. In terms of, as I said, we want to see some rotation. So in terms of where we are, resources have been really quite strong. So this is one of the indexes that I look at in Australia, and this is the Van Eyck Australian Resources ETF, or Van Eyck, and it's not a huge whack in BHP. It has quite a good mix, and you can see that's had a really strong run and starting to settle in here. So we would have expected a bit of back and fill around this point, and that's kind of what's happening at the moment. But if we look across the resources space, so if we have a look in, say, one of the stocks that we've got in our model portfolio, XMET, that probably looks a bit more pronounced, just in terms of it having, this was the original base, had a huge run out of there. There's kind of like the original base. It's had 1, 2, third push, and now needs to settle in. And that's pretty much what we're seeing across the resources complex, is it just needs some time. So obviously, it's popped up, it's sold into, obviously there's been quite a bit of profit taking. So, it just feels like it needs a bit more time. It's not unlike what we're seeing in gold and silver as well. Had a huge run, just needs to settle in and needs a bit more time. So it'd be interesting to see how this all plays out, whether, how much time we do need, and whether that money comes out of mega caps and starts rotating into things like resources. But I still really like that space, but I just struggle to really find anything that looks viable right at the moment. Here's copper. Obviously, that was, the US announcing tariffs on copper. Starting to look quite good, but, how much longer is this going to take before it can push out? That's pretty much the question at the moment. So I really like that resources space. We just need a bit of time, pretty much across the board. And there's some interesting things popping up. So obviously you've got coal. This is in the US. We don't have a coal ETF in Australia, but look at that really nice base. That's also settling in. So we're interested to see if any of these can push out this week, or they need another week or another 2 weeks until they can start to go. Oil services is also really interesting because it is starting to lead that that oil price. Obviously, been a really bad performer. It's made its way out of that, and it has actually outperformed the last couple of, well, pretty much, the last month. So, compared to a lot of the markets. So that's going to be interesting here, and whether that can hold and how that sets up for the next move. So I really like that resources space. The whole, background of why gold and silver move, why do platinum move. It's all related. Commodities, it's just a matter of one by one, I think they're going to go. So interestingly, here's copper. This is one of our key ideas, and we harped on about that and quite a few times to subscribers, and it had a really good push out. So there's pretty much your original base in September, pushed out. You've had one touch there, two touch there. So maybe this is only the second touch, and it's got more in it at the moment. But that's another one that we're really starting to watch. Will copper go? Certainly, oil doesn't look like it's going, but we've got those oil services stocks, perhaps leading this whole space. I mean, oil's still very much in that downtrend. But what's also interesting on the flip side, we've got natural gas, which really hasn't done much. And you can see big base. So once again, big base. The bigger the base, the higher the space. But certainly that's looking really constructive. Had a good finish to the week as well. So things are happening in the commodity space. Still very much like that space, but we just need more time. So once again, moving back to that original point about the US market, how is that money going to flow out of those mega caps, and where's it going to go? Is it going to go into resources? Or the third point, is it going to start to go back into Asia? So some parts of the Asian market have been, had a really good run. So here's Japan, somewhat unexpected and is just launched, but now we're getting extended. So the breakout was probably around that August level. So you've had kind of 1, 2, third push. This is what we're expecting for Japan, a bit of settle in there. Korea's been huge as well. So South Korea, huge move, just out of nowhere back here, rallied up, held a really nice base. Now you've kind of got 1, 2, third push as well. Probably need a bit of a rest there as well. But they're amongst some of the best performers globally at the moment. So now, obviously, we've been talking about this for a while. On one side, we've got India, which we really like, but just look at this chart. It has actually done quite well. So this is on the daily. The Nifty 50 index has done quite well, settling in, but you're going to get a lot more information off the weekly chart here, and you can see what's happening. There's 1 compression, 2 compression, and we're just going to play out that third compression. So is it going to be a December time frame, or is it going to be a 2026 play? But that looks really constructive. And remember, India is a really key global economy at the moment in terms of growth. So that looks really nice. It's just a matter of when. And we've got that similar kind of feel in terms of China and Hong Kong. So to get a better feel on the Chinese, so this is the Chinese A50 stocks, you can see the 50 biggest stocks in China. You can see on the monthly chart, it looks a lot more constructive. That's a really nice base. And it feels like it kind of sat here 1, 2, 3, 4 months. And now around here, we're kind of at that point, 1, 2, 3. Do we need another month or another couple of weeks? But it looks, just in terms of symmetry, it looks quite good and feels like it's only a matter of time. So on the daily chart, you can see it's a little bit more volatile, but we do have news out just today regarding the trade deal between China and the US. So we'll see how this plays out. But it looks a bit choppy on the weekly. On the monthly, it looks really good. So that's probably too faster move from the lows, and certainly wanted to settle in a little bit. And we'll just see how that plays out. But that looks really interesting. And then obviously you've got Hong Kong as well. So this is the Hang Seng index, and you can see once again on that weekly chart, this in terms of symmetry, so this is a monthly chart, sorry, in terms of symmetry, that looks really good as well. So you're probably like 1, 2, 3, 4 months there. We're probably 1, 2, 3. Do we need another month, another couple of weeks to create that symmetry? But that looks really constructive and just feels like a matter of when. And then on the daily chart, it's a lot more volatile, but we'll see how that plays out this week. So you kind of just want to see it push up, hold this low here and push up out of these points here. But that looks really exciting. So that's kind of what I'm focused on this week. I think I'm really concerned, given the lack of breadth in the US and the mega caps just moving. So even if we just had a look at FANG, which is listed, an ETF listed in Australia that covers the FANG stocks, you can see that's pretty much where the action's been. And certainly post kind of the tariff, the second tariff kind of correction, little one that we've had, and you can see that really strong week or so we've had in the FANG stocks. So they're the mega cap tech stocks. That's where the action been. Outside of that, it's been really quite weak. So we want to see how this plays out. Are we going to start to see a bit of selling and and funds start to run in different parts of the market? And therefore, just in terms of this, are we going to start to get a bit of, repair into these figures where we start to see more stocks in the S&P 500 start to get above that 20-day moving average, above that 50-day moving average, above that 20-day moving average. So we kind of want to see some repair in the US market, just in terms of breadth. And then we want to see how that plays out in terms of, does it flow into resources? It feels like it's only a matter of time there as well. So you've got resources which look interesting. Here's QRE. So this has a bigger exposure to, say, the mega caps. BHP, I think, is about 40% of this ETF. It's kind of settling in. I mean, look at BHP as well. That's only in a stage one, kind of in terms of its setup. And it feels like it's just a matter of time. So that's kind of a feel. So there's your weekly chart for BHP. Looking quite constructive there on the daily chart, but you can kind of see it's coming up to that point in resistance. But that, that's also not unlike what we're seeing in Hong Kong or even China. So that's interesting. When does it start to push? Does it need another couple of weeks, or will it start to go sooner than that? And will that be a beneficiary of some selling in those mega caps in the US and start to flow into resources? And then, of course, you've got the whole Asian complex, in particular China and Hong Kong, which I think are really still quite exciting, good value. And here's Alibaba. And you can see that popped quite nicely at last earnings from September and is now kind of settling in. If we look at a monthly chart of that, you can kind of see also it did need some time. It needed some time there given that move. So we're also in a stage one there. How much longer does it have to sit there? Is it another month or is it ready to go now? So obviously we've got earnings in, say, mid-November as well. So that's going to be really quite key. How's this going to play out into earnings? I mean, that kind of setup would just be perfect and a pop through there. And I think we're on for a run. I mean, it certainly can go from 170 back to previous highs there at over 300. So that's almost 100% return. So really excited about that whole Asian space as well, Hong Kong, China in particular. So that's what I'm watching this week. Concerned about the US market. Want to see that breadth issue solved, because the less participation we've got in that market, the more more risk that something happens in those mega cap stocks and we get a bit of a correction and a big spike in the VIX. I want to start to see money flow back to resources, flow back to Asia, and certainly small caps as well in the US. So that's the real focus this week. I think it's going to be an interesting week. We didn't have a lot of ideas, just in terms of things didn't feel like they're set up yet. We need a little bit more time, but still very excited for the opportunity available to Aussie investors in the ETF space. So until next week, follow the trend.